So we've got what, 60 points on the Nifty. Just want to highlight a bunch of stocks before we move on to next thing. This is what the broader market is doing. Advanced decline is still strong, 2:1. So let me just list out a bunch of gainers which have got large volumes. At the outset, let me say that volumes generally in the last couple of days have come off very sharply. I mean, today is also a case in point. Let's start with Emami. This is the top volume gaining sort of combination, 14% higher on Emami. DLF, when we started at 130, was up 4%. It's up almost 7%. So there is another leg up we've seen on DLF. There's Bank of Baroda, which is up about 4.5%. That's 103, 104 on Bank of Baroda. Praj is up 7, a small name. It corrected quite a bit recently. There's Unsell API. So there is, there is REC, beg your pardon, which is up 4%. So that's 125. Bank of India is up about 5.5%. So PSU banks, I can spot more than a few names. Indian Bank is the other one, 5% gains on Indian Bank. Steel Authority is up 4.5%. Edelweiss is coming up about 4.5% at 142. Jubilant Industries is up 4.5% at this point. There is, Dhampur Sugar 5, Prestige Estates about 6.25. And of course, I was discussing Tejas Net with Ashwini earlier, which is also seeing about a 10-11% kind of a move. So this is essentially what's happening on the gainer side. On the loser side as well, I mean, there is a Kaveri Seed. Maybe we can just put up so at 130 it was down 9%. It's down 13% now. So it's lost more. There you go. 407. It's actually at the day's low. But apart from that, I can't see any large cuts backed by volumes at all across the board. I mean, there are smaller things. Graphite, HEG in the 2.5% loss region. L&T Technology Services is down about 2.5% as well, but that's about it. The only big one is Kaveri. Okay, let's get you some opinion now. Emami is gaining today. The promoters have sold off 10% of their stake in the company to pay down debt. I mean, the market's taking it with both hands. Anisha is here with more details on this one. Anisha.
Well, hi Prashant. Well, as you mentioned, the promoters have let go of 10% stake for a value of around 1,600 crore rupees, and that has been viewed positively by the street. Now, they have sold off the stake to the mutual funds like SBI Mutual Fund, L&T Mutual Fund, IDFC and the likes. And because of this move, the debt of the company will come down and the funding and the liquidity issues will really ease out, and that's the key positive. Macquarie, for example, views this as a positive development because the overhang of the pledge shares also goes away. Add to that, the promoter holding will now come down to 62.7%, and even if you look at the valuation, it has been done very close to the current market price. So that kind of also assuages concerns when it comes to the investor concerns. So overall, a positive development from the corporate governance side of things, because remember, the promoters had over-leveraged themselves because they had started investing in the solar and cement businesses as a part of the stake sale. Now they'll use this money to pay down the debt as far as those other ventures are concerned as well. So overall, a positive move, and you can see the impact on stock.
All right, Anisha, thanks very much for that. Also, Bata has been a stock in focus. My colleague Reema caught up with R.K. Gupta, the Director of Finance, as well as the CFO at Bata, to talk about, how the margins have been this time around, whether or not that's sustainable, as well as the outlook. Hear him out.
In last quarter, we grow by 16% in the top line. And as far as margins are concerned, means we believe that these margins are sustainable. These are the result of various product cost initiatives, long-term agreements with the vendors of raw material as well as finished goods, and optimum utilization of our manufacturing units.
So margin sustainable at current levels of 21%. On the top line, you said the company's delivered about a 16% revenue run rate. Now, the December quarter had the benefit of the festive season, which got shifted. Now, in the coming quarter, what is the kind of run rate we can expect for Bata to deliver?
Means in the current quarter, we are working well. As you know, as a company policy, we don't give any forward-looking statement. So please wait for some time. Yeah. but we are expecting good numbers.
So in the teens, is that fair, or double-digit run rate should continue even in FY20?
Yeah, for sure, for sure.
Okay.
Means we are putting our best efforts, and we believe that double-digit growth is possible.
Great. I want to break this top-line growth into retail as well as wholesale. Now, retail is about 85 to 88% of your overall revenue. And wholesale is the other part. But wholesale actually degrew by 2 to 3% in the December quarter versus expectations of a modest recovery, while retail grew 18%. Can retail sustain this kind of growth, and do we expect a bounce back in wholesale?
Means yes, retail we grew by 18%, and we are putting our best efforts.
Okay, well, that's it on this edition of Midcap Radar. Stay tuned. Our special mutual fund corner will take your questions with regards to mutual funds on the other side. Stay tuned. Back in a bit.